So it has been brought to my attention that our education system is doing a horrible job of preparing people for basics of real life as an adult. Specifically, in this case, we're talking about credit cards and your credit. If you're new at this, let's run through the basics. This is bare basics. Starting with, if you have a credit score of 0, that may actually be better off for you than a low score. 0 means you have nothing. There's no credit history. They basically consider you a blank slate. If you have a low credit score, you have things on your score, on your history, that is making it harder for you to improve your credit. You have to counteract them. If you do something good related to your credit, and you have a 0 score, you're going to have an excellent credit score immediately, very, very, very quickly. If you have a low score and you do good things, it is going to improve, but it is going to take time. Bad things have to fall off your credit report. You have to do more good things. So the goal is to minimize how many bad things you do. Really, 0. Like, don't do things that negatively affect your credit. This is like paying late, not paying, exceeding your limit, too many credit checks, which is specifically where we're going to start today. Every time you apply for credit card, a loan for a vehicle, every call to your credit is actually a negative. That's a bad thing. It isn't the end of the world, like it's an expected thing, but too many of them in a short period of time is a red flag. If you apply to one and get denied, that is a less negative effect than applying to a bunch, because even if you get accepted at a couple of them, you apply to a bunch. They look at that as a red flag because they think you're trying to get more credit than you really should have. Don't do that. And really, the answer is, if you have minimal or no credit, you want something called a secure card. Essentially, that is a card where you've prepaid. It's not a prepaid credit card. It's not a debit card, but it's the same concept. You have given them enough money to cover your maximum credit on that card. That way, they know they're covered. You give them $250. They give you a Mastercard. Do not leave a balance on that card, or you are going to be paying a massive amount in interest. However, the idea is that you're improving your credit. Use it. Pay it off every month. Put your gas on it. Put your groceries on it. I don't care. Spend some money on that card instead of directly out of your debit account. Pay it off on time. Bill comes in, pay it. You're building your credit. 6 months, a year later, stop using that card. Make sure it's paid off. Apply for a non-secure card. Get a regular card with a good interest rate, 20%. It's not going to have a high balance. Unless you magically are making a ton of money and you didn't already know this, you're going to get a low maximum balance. That's fine. Improve your score, build a history. Because the more good points you have on that chart, the less one negative affects you. However, don't close that old account. Don't close it out. I know you want your $250 back or your $500 back. Don't close it. Not yet. Because when you close a credit account, that also can have a negative effect. If a credit account is in good standing, if you close that account, it drops off your credit report. All the good things you did on that go away. More accounts is not bad. A Mastercard, a Visa card, and honestly, an American Express or a Discover card. It gives you options. That covers you for like 99.9% of vendors out there, including international. You are using them every month, just even if it's one transaction, and you pay it off. This is building your credit report. A couple of years from now, if you still want that $250 back and you're willing to take a small hit on your credit rating, sure, close that secured line. Just don't do it until you've got a couple more cards on your record that have been around for a little while. If you get denied, figure out why. They usually tell you. They send you a letter saying why they denied you. Figure that out. Did you try for a card that is meant for people with excellent credit, very high income, long credit history? Yeah, that's not going to help you. Do you have really crappy or no credit and you didn't apply for a secured card or a beginner's card? But that's the key. You want to build good history. Now, when you're comparing cards, interest rate, stick with major names. You're going to get better service. You're going to get a better rate. Their website's going to work better for payments. Look at things like late payment forgiveness. Do your research on these things. Is there an annual fee? How much is it? Because having an annual fee might not be the end of the world if it's $25, $50, and the perks you get from that card are worthwhile. In other cases, for example, I use an Amazon card through Chase Bank. Why do I have it? Because I get 5% back on Amazon purchases. I don't spend nearly as much money on Amazon as I used to, but back when I spent a lot of money on Amazon on a regular basis, that added up a lot. But for everywhere else, it's a basic couple points back. It's not anything crazy. So do your research. Think it through. Pick one. If you got to start with a secured card, start with a secure card. Don't apply to a bunch of cards and get denied, or even just take that hit and then, hey, 6 months from now, that hit's still on there. You got the card, but you got denied on other ones. And now you're looking for a car loan. Well, now you got a higher rate because that's what it'll mean on a car loan. You'll get a higher rate. You won't get denied. You'll get a higher rate. And that makes your car more expensive. So anyway, take care, have fun, stay safe, everybody, and be smart.